Good morning, everybody. It is Tuesday morning, April 21st, and we have moved our Tuesday night webinar to Tuesday during the day because it seems to make more sense since this is geared towards stock and option investors and traders, that we should do it during daylight hours. Plus, now I don't have to work past dinner time on Tuesday. I wanted to just go over a couple of things real quick. I'm writing an article right now titled "Reopening the Economy Could Cause a Mega Meltdown, Mega Crash." Haven't figured out if I'm going to use mega crash or mega meltdown, and a depression. And I've been doing an awful lot of research and am lucky enough that we have some ridiculously good people involved with these services and a client as well who, they've worked for NGOs, the World Health Organization. Two of them have been like top 3 health officials in their country at a given time, including during the H1N1 virus. I have a friend who was involved with SARS 15 years ago. So, several geneticists, several professors of biology and, other medical related fields, quite a few doctors. So my crash course on this stuff has been pretty off the charts here. My notes are pretty amazing too, some of the email strings, and just trying to compare all the range, right? The range of opinions and all the different scenarios of what could happen with coronavirus. And it's clear to me that, it's not going to wipe out humanity by any stretch of the imagination. We can see the potential for millions of deaths, though. And the question that I know people are kicking around is, well, most of those people were going to die anyway, sooner than later. Shouldn't we just let them go for the benefit of everybody else? And if you've watched dystopian movies or read dystopian novels, I just discourage you from thinking that way, because there really truly is almost no level of economic hardship that we can't overcome in short order. And I would point you to every period in history, American history anyway, excluding the Great Depression, which we screwed up managing. So when you take a look at the relief bills and bailouts and whatnot that are going on right now, apparently there's another bill in the House and Senate that's going to get passed imminently. They seem to have a deal. It is not unreasonable to think that in bazooka-like blasts, true helicopter money fashion, that we can't keep ourselves from a depression. Where that starts to be unlikely is if we have to do it continuously. So the theory of helicopter money is that you run into a big problem, you put money onto it, you bail out the right things, you stimulate the right things, and you come out of it. Modern monetary theory, on the other hand, is that you just keep printing money over and over and over again to support whatever budget thing you want to support. Well, the problem with the second thing is that ultimately it destroys the currency, because, again, currencies are competitive. So in this crisis, for the United States to print $10 trillion, basically half the size of the economy, I don't think would be out of the question. And I think that's the direction that we're headed. And I think that's the right thing to do. Now, does the medicine have side effects? Of course it does. We are going to see a period where price levels go up faster than growth goes up, and before unemployment comes back down. That period is going to be stagflationary, probably basically be next year. Could be sooner, but I really think next year is looking like a stagflationary year where price levels go up and the economy struggles to keep up with that. Ultimately, it reverses and we start to get disinflation again, where prices stabilize and the downward pressure is roughly equal to the upward pressure. So the deflationary forces that we know are in the economy from demographics push down in a way that offsets all the monetary and fiscal policy that pushes up. And I just want to keep on talking to you about, because I don't know who's new on the call, at some point in the next decade or so, we have to bail out the retirement system. And it's not going to be cheap. It's going to be around $30 trillion. And that will prop up Social Security for 100 years, literally 100 years, and bail out all the state and municipal public pensions, which are in general 5 or 6 trillion underwater. So 5 or 6 trillion to the pension systems, probably throwing another $500 billion for the post office at some point, because I do think the post office is going to go private, but there's going to be a lot of conditions involved to how it's run, and then whoever buys it is going to have to promise not to sell it to another entity. Government gets right of first refusal, and government's going to pick up the pensions. Something along that line is coming, and that might happen sooner than later, because President Trump, for whatever reason, has decided he hates the post office. And theoretically, I actually understand some of the things he's saying, even though he's not saying it on economic grounds. He's just being blatantly ideological. Regardless, think about the knock-on effects if the post office goes private and the conditions are something along the lines of you have to keep, a post office every 10 square mile area. And you have to have a 401k that matches and health benefits, and we'll pick up the pension. It could be something like that. I can see Berkshire Hathaway buying the post office, to be real honest with you. And I think that might be extremely good for the country. So we'll see. When we take a look at some of the stocks that we're interested in, we need to consider the special situations that are coming. For one, and I actually thought about this the other day, and Morgan Stanley beat me to it. Expect some sort of cash for clunkers next year, and that'll impact some of the stocks that we buy. Especially since I think that you're probably going to see a much bigger incentive for EVs versus buying a internal combustion engine vehicle. So it's not going to get passed this year, but I do think it's something that we should keep on our radar for next year, and that will impact how we invest this year. In any case, I worry that we reopen the economy too soon, because as I've shown you in some of the other charts, we have not waited long enough on reopening, just from the sense that the curves haven't bent enough. They haven't flattened out. And it's important that we flatten those out, because one, if we see the curves bend back up, that's very bad for overwhelming the healthcare system on top of killing people. And then, of course, if we get a second wave that's severe quickly, that's another 2-3 months that we should keep the economy closed. So keeping the economy in the condition that it is now, basically an induced semi-coma, until probably the end of May, going into June, and then you start doing your phase 1, 2, 3, beginning in June. Although I don't see gatherings over 50 people happening again until there's a vaccine. So you might not see sports and things like that with crowds for a very long time. Or they're going to, only seat a third of the seats, something along those lines. Restaurants, things like that are going to have stipulations, and think of it like the fire code. Maybe you can have 1/4 of the people in your place that the fire code would allow. Maybe it's a person every, 6 by 6, every 36 square feet. It's going to be something. And we need to understand that until there's a vaccine, we really won't have herd immunity. The United Kingdom just basically came out, and I think Sweden's going to be right behind them. We'll see how stubborn they are. And saying, look, probably we didn't handle this right at the front end. The whole herd immunity idea by just allowing the infections apparently would take 6, 7, 8, 9, maybe 10 waves. Think about all the people that die. So if it comes down to just printing money for a while to support things, just keep in mind that's probably way the lesser of two evils. Pay the extra unemployment, pay the companies to keep people on furlough, paid furlough, and then in a month or two, you let it slowly start to wind down. If we instigate a second wave now, like I said, that just prolongs things and costs more lives and more money. So we probably ought to stay hunkered down about another month in most places, especially anywhere urban. But in June or July, I plan on going out west to the Dakotas. Probably isn't a better year to go to the Dakotas and Yellowstone and things like that, because there'll be less travelers and they haven't really been affected. So we still want to stay away from people and maybe wear some latex gloves when you pet the buffalo. In any case, let's take a look at some charts. I wrote that article the other day that there's going to be at least 4 companies removed from the S&P 500 that are oil companies, and there's probably 3 or 4 more. The S&P 500 usually doesn't make just huge changes. They don't usually just like remove 20 companies. But clearly right now they could. They could probably replace 20 companies pretty easily. I don't think it'll be that many. I think it'll be 5, 6, 7, 8. And a lot of the removals will be oil companies, because many of these oil companies will never, ever, ever be $8 or $10 billion companies again. So the whole idea, and actually, if you just Google shale stocks, and you go to the news section, oh, it's not up there anymore. Oh, there it is. Look at that. Wow. One of the most popular stories about oil this week was 4 oil stocks about kicked off the S&P 500, and they really liked my picture that I did of Costanza with shrinkage. So in any case, there's some companies that you really just want no part of. Helmerich and Payne is way below the 8 billion-ish to be on the S&P 500. Apache is way under. Nobel is way under. And National Oil Well Varco, which this guy, this Jim Cramer guy, pounded the table to buy a while back, was way down there. So understand how the shale boom worked. You know, I was telling people buy oil stocks, buy oil stocks, buy oil stocks. Then right around here, I told people to sell oil stocks. And then right around here, I said, buy them back. Oops. Oops. And we bought them for this and didn't sell them here like we should have. You know the story. But in any case, this is the new reality for oil. They're all going to be jumping around in here. And that's the ones that survive. I did mention the other day in one of the chats, I think over at Fundamental Trends, if you are truly interested in owning oil, and I asked somebody to do this and nobody seems to have done it, take a look at the shale stocks that are Permian focused and take a look at their first lien debt. So Concho, Pioneer, Parsley, Diamondback. Take a look at those companies. I think Encana, Ovintiv, Devon. You know, I don't like Devon's got those assets over in Colorado. Same thing with Occidental. Occidental's going to end up being owned by Warren Buffett and Carl Icahn pretty soon. But the first lien debt, when these companies declare bankruptcy, and I don't think Pioneer declares bankruptcy, but many of the other ones will. And even if they don't, you probably can buy these bonds at pennies on the dollar, right? So you go over to the FINRA website and you look up some of the bond prices, or you do it through your brokerage. But find the first lien debt, the debt that you know will become new shareholder or get made whole, one or the other. You really can't lose on those, I don't think. So I would take a look at that. I think that's the best play in the oil patch, is to buy that first lien debt, because I bet a lot of it, and I haven't looked at it lately, I bet a lot of it is 30 to 80% below par. And that is just a great deal. So that is where you want to participate, is you don't want to buy the oil stocks. You want to buy the debt that's going to be converted into stock if they declare bankruptcy, or be paid against assets. So take a look at that. That's why Buffett's deal with Occidental was made first lien. It's ahead of everybody. So between Icahn and Buffett, you know, I think between them, they're like 20% of the company. They're going to end up being the new shareholders of that company. It'd be interesting to see Warren Buffett and Carl Icahn talk about managing the company going forward. And again, oil's got a future. It's just going to suffer from shrinkage long term. And when the cash for clunkers comes out, expect there to be a much bigger incentive to buy electric vehicles. So, all right. Let's take a look at some of the companies that are going to go onto the S&P 500. Enphase isn't there yet. Turns out that Shopify is a Canadian company, so they can't be on the S&P 500 yet. Now, they could be in the future, but it would have to do with most of their business being done here. There's criteria, and I don't think they fit the criteria. And Twitter apparently is already on the S&P 500. I didn't even know that. So my initial screen, I must have missed it. They must have been in my quotes and just showed up on my screen. That's how Stock Rover works. You gotta be careful and make a mistake, because you can overlay your quotes into your screens to see how things compare. And I must have goofed. Now, Workday wasn't allowed to be on the S&P 500 a while back because it was primarily owned by the founders. The company now has about 73% of its float public, so they'd be eligible for the S&P 500 again. So the rest of these companies is what I want to focus on. I'll take a look at Square, Tesla, Roku, Teladoc, PTC, Workday, and Zendesk. So let's take a look at Square. pull up one of my screens from Stock Rover. I tell you, if you like the screen for stocks, I like this better than anything else. This is what it's laid out for. It's laid out for screening stocks. It's worth $30 a month if you're going to do it once in a while, or $20 a month. I don't even know what it is, but you can see I ranked by market cap, and Shopify, Canadian company, so they're not going to fit. So we move them. So companies like Tesla, Workday, Square, and a lot of these other companies that we should keep an eye on potentially going on to the S&P 500. Roku, Zendesk, PTC. Ionis, I think this is one of the vaccine companies. Teladoc, Scott's Miracle-Gro. Anybody know what that's for? Chemed, some other companies I've been looking at. So I have them color-coded for different reasons. But one of the other criteria is profitability and financial sustainability. I don't know how they can keep Tesla off of the S&P 500 much longer. I don't suspect they're going to go on this quarter, but they might. I don't really know how to get in the mind of the S&P 500 people. But if GM and Ford can be on the S&P 500, Tesla's in better financial shape than them. So, GM for sure. So I don't really know how they keep them off other than saying they haven't been consistently profitable yet. So I guess that's fair. But at some point, Tesla's going to be on the S&P 500. So either you want to own this or you want to own that ARK Innovation Fund that we're high on. Workday, everything's going for them. They're already in the NASDAQ 100. They're profitable. They've been rejiggering their business, but when you take a look at their profitability, they should be there. So I think Workday is going to get included. Square is going to get included again. Look at EPS, right? EPS growth rates. I can add the EPS. Super easy to do that here. Quarterly EPS. Oh, that's a nice chart, huh? Wow, look at that. So you see a lot of green, right? Not a lot of red. That means they're profitable. Wow, that's a neat little inclusion. I didn't know that's what that did. How about that? All right. So I think Seattle Genetics is something that I'd like somebody who's maybe a geneticist or biotech investor. Explain Seattle Genetics to me. Match.com, I think that their float might be too low, but that's something to take a look at. Again, plenty big, 21 billion. Ring Central. I want to add them. I've used Ring Central in the past. So where do they go? This is something that we want to add. Color me yellow for keep an eye on me. So as you go through these companies, right? So they're not quite profitable yet, but I think they're almost there. My guess is a quarter or two out. I just want to keep pounding on. There's going to be huge turnover in the S&P 500 in the next several years. I mean, most of the oil companies are going to go. You take a look at a lot of the companies that are just super small now, under 10 billion. If they're not growing, they're in trouble. And who really thinks that these oil stocks are more likely to go from 2 billion to 10 billion versus go from 2 billion to bankrupt to maybe 4 billion after bankruptcy? I think that's the more logical thing. So a lot of companies going to get jumping into the S&P 500. So let's take a look at some of them. Square. I've been looking at doing different things with these charts for you to look at. So on one of these, I was playing with the Fibonacci's and how to trade it. You know, everybody's trading style is going to be a little bit different. Everybody's going to have different reasons for doing what they do. I think you should get to know these Fibonacci levels because they recur roughly over and over and over again. It's an overlay of psychology that for whatever reason reoccurs in nature, from psychology all the way to other things in nature. I don't think anybody quite understands why these recurrences happen, but they do. It's been going on forever, so you might as well pay attention. Now, I don't think this is any more perfectly reliable than the lunar cycles, which we can tie lunar cycles to stock market optimism and pessimism as well. So again, these are just little guideposts to kind of give you a way of ballparking about where buy and sell levels are, because there's not really a line, right? It's more, ranges. And you have to be aware that, if somebody says, well, I'd buy this at 55 and it only gets down to 60 and then goes up to 130, are you going to be mad? Well, think of the line as making boxes. And you can see how I draw my lines, right? You should see the levels. IPO level, tested it here and here. So that's kind of the very bottom. And we're going to color code the apocalypse price green, meaning if it's going to stay in business, you should buy a lot of it. Okay. And we got help with this one, right? Because it actually came down here. Red. Yeah, perfect. Right. Resistance, went through resistance, but then came back down. Kind of an imperfect chart. Then tested it again here. And ultimately, that's where it got down to in this crash. So I think your bottom fishing is probably around low 60s on Roku. And again, this is apocalypse fishing. This is end of the world stuff, this green number. And where is your shorter term resistance and Fibonacci level stuff? Probably right in here, right? Right about there. So put this here. Make your pretty colors. Give me pretty colors. There we go. That's yellow for maybe. So if you wanted to start scaling in, you can probably start scaling in this yellow line area. And then you probably add a ton of it if it gets down into the low 60s again. But this is your buy range from the yellow line to the red line. So you probably buy in once, maybe twice, maybe 3 times, right? Don't buy down every dollar, right? There's a word for that, martingale. You don't want to get involved with that. It's kind of like doubling down in blackjack with the idea, well, I can't lose 10 in a row. Oh yeah, you can. Trust me. I've been there. I've been at a blackjack table where I lost 10 in a row. It can happen, and it can get, if you're doubling your bets, it can get there very quickly. You can spend a lot of money. All right. So I'm going to remove all this Fibonacci stuff. we're going to have a very simple system. Yellow, red, green. Yellow being, yeah, it's getting into the buy range. Red being probably ought to back up the truck. And green being, hey, it's the end of the world. If we live, you should probably buy right here. Then I will do this. I will save the image. And even if you have a free membership to TradingView, you can see this because I'll put the links out. Right, so our chart books will basically be link books, chart links. Now, if you have a membership, then you can manipulate it the way I did, and you can put in different tools, right? You can do some Elliott wave stuff if you want to. In fact, I will show you. So if you want to do a big Elliott wave stuff, you could. You know, that's wrong what I'm doing. I mean, it's not really, that's not really what it looks like, but if you're going to do Elliott wave, I guess here I can show you the right way to do it. 1, 2, 3. That's I forget what that's called, but that's another one. When it kind of goes like that, kind of a sideways. 5. So 1, 2, 3, 4, 5, which is typical of Elliott wave. Now on the downside, you would go 1, 2, 3. The down patterns can be 3 waves or 4 or 5 waves. So if you go here, 4, then it could go way down here, 5. I don't know if that's right. You know, this could be something else. The problem with Elliott wave is interpretive, and people interpret it wrong all the time because they have their own biases. So let's start here again. 1, 2, 3. What the heck? That doesn't seem right because it's not. So we have to get rid of it. It has to end on a 1 or a 5 or a 3 for the down ones. And again, I'm not taking the time to really explain all this because if you see this, there's 5 different ways that you can chart based on how long you're going to do. Oops, sorry. But I do think, stop it. There we go. So 1, there's a quick tool for doing this too. 1, right? That's probably 2. That's probably 3. I think that if you're Elliott waving this, I think the bottom's in on Roku. So if the bottom's in on Roku, then what's next with Elliott wave? It means that it started a new bull market. 2. God damn it. I just want 3. Whatever, that's a 3. I don't know how to use the tool. So if we're going to do 5 waves up now, that means we're starting here. Here's 1. 2 is going to be probably in here somewhere, right? 3 will be way up here somewhere. As far out as it'll let me go. So that's what you should expect. I think that you should expect with, I have to figure out how to use those Elliott wave tools. I don't use them very often. But, you know, and you can do smaller ones too. So 1, 2, 3, 4, 5. And that would be a shorter time frame. That's up to you if you want to learn how to use that stuff. I think the Fibonacci levels work well. I think there's just a whole lot of things that you can do. I just use the giant support levels and I try to get close. And then I worry about being more precise, right? Because these lines will be pretty accurate. I worry about being precise on game day at the week that a lot's going on or the 2 weeks that a lot is going on, like right now. So I think that as you get close to this yellow line, you got to figure out where you want to scale into. So like right here, you know, that could be a pullback level to just under 100. And then do you buy a little bit right here? You could. I'm going to err on the side of telling you down here. But you could conceivably buy right around here, right? See that? Bounce, 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 goes through. So this could be a pretty good support level right there too. If you want to use that, you go ahead. And at some point, when I think the coast is clear, I'll move this yellow line up. Right now, I think this yellow line belongs down here, just because I don't think the world's getting better that fast yet. All right, so let's take a look at square. Same dealie. If you use shorter term time frame, you could conceivably say we're kind of in a battleground right now, right here. It's just above this line here. But I think that this is the better line down here. And it probably could even be moved up just here, right? Yeah, just a hair, I moved it up. Top of this one, bottom of that one, battle zone here, broke up. Went through this battle zone here. Now it's getting back to the battle zone. Is it going to go up or down? And that's something I want to tell you about, is that 2700-ish, 2710 I identified, and upper 2800s, 2900. So that range on the S&P 500 between 2700 and 2900 is a battle zone for the stock market. And we don't know if we're going to go back below 2700 or we're going to just break out and rally above 2900. You know, take a look at the S&P 500. They're getting the news that there's a deal in Congress, and it's not making things better, right? So sometime this week, I'll probably decide what to do with my shorts, because I still have those S&P 500 puts for me. But I want you to be looking at Square. I want you to take a look at Teladoc. Here's the thing with Teladoc. I do think these guys are the real deal. But man, that is that's just a heck of a run here. I mean, that's a big breakout. So we have to figure out, where does our yellow line belong? And honestly, I have no freaking idea right now. So I subscribe to a couple Elliott Wave services, 2 of them, not just Avi's. And I'm going to try to figure this one out, because I think that's an awfully quick rally, right? And this is one of the stocks. It's a top 10 stock at ARK, which is why that fund has done pretty well. So think about ARK investing, owning Square and Teladoc and Tesla and a few others that we look at. What if those all come back 30%? That means that ARC could come back 30%, right? So this is a fund we like. And look how it went from 60-ish, 34-ish. I mean, I wish I had bought it at 35, 36, which was my original intention. I mean, I get pretty close on these. So if all those stocks drop 20, 30, 40%, what happens to this? I think you can make a pretty strong argument, because this is aggregating a lot of companies that we like. Maybe you throw an Elliott wave on here and say, where should we be starting from? 1, 2, 3, 4, 5. That's not how that works. 1, I think. 2, 3. No, that's not how that works, right? That's how you have to. Where's your starting point? Are you starting here? Starting here? 1, 2, 3, 4, 5. Aha. 1, 2, 3, 4, 5. Wahaha. So now we want to do 3-wave correction wave. That's what we were looking for. 1, 2. Aha. That 30-ish area is where I actually lowered the prices down to. We have to take a look at the Fibonacci levels, see exactly if this is about right, but it's probably close. So, you could conceivably see something like that. I think it's going to happen before the end of May. Right about option expiration. So low 30s on ARC, I think, is still very possible because it owns a lot of these stocks. And even though these are positive stocks, and they might get thrown into the S&P 500 before that big correction occurs, right? So that's why I want to own these now. And with this one, maybe this doesn't really set much of a low. Maybe there's 1 day or 2 days where the market's just horribly pessimistic, or back-to-back days, right? 2,000 point down days, just everything gets sold. Remember, this is psychology. That's probably what this is going to look like. Does it stop short? Are these waves interrupted because of all the stimulus? We don't know those things. How do you know? I mean, can you really even visualize trillions and trillions of dollars? I mean, makes me think of a couple of South Park episodes. All right, so we will publish this one. There you go. Teladoc. I think this is the red line. So where is that yellow line? Look at all this overlap right there. Areas of overlap are important because that indicates a battle zone. So I'm going to say you're probably looking at about there. A little higher, a little lower. Go play with your daily Fibonacci's. Figure that out exactly. And I'll move this if I think I need to move it a little bit. But right in this battle zone right here, right? Look at all that overlap. All 4 weeks hit that line. And ultimately ended up above it. So I think low 120s, I want to buy Teladoc. Workday. That's something. What is it? I think that's probably the red line. Trying the apocalypse is pretty easy. That. Hit it, hit it, hit it. Went through the top for a minute. Hit it. And in search of where do I want to start scaling in? Shorter term, right? Closer to it. And we're probably I'm gonna switch that. For me, I'm gonna make that the yellow line. Again, you can do what you want to do. And where is that red line? Is it across here? Broke through, went back below, stayed below, almost tested. Yeah, I think that's probably it. I think that makes a lot of sense to me. Remember, the further you go back, the company may be a lot different today than it was in the past, right? This fights it, breaks down, gets back up, it kind of reloads. I mean, that's a reload. And it breaks out. So I think these are probably both pretty good. Again, I'm just looking for those big support zones. You know, where we see a battle zone and what does it do? What really is resistance? Bam, bam, takes off. Gets all the way back to it. So I think 120-ish is where you look to get into Workday. I'll save it for you. Zendesk. That's something. I think that's probably right. So up here, it's hitting resistance. Will it go up through there? Look, see it, resistance. It matches. And there was a battle zone here too. Now we have all this overlap here. Again, overlap is important. Kind of a weak resistance level, support level there. That's resistance. Yeah, right about there. Give or take. Not going to be perfect. If you're looking for perfection, you will miss excellence. What is that? The perfection is the enemy of good? Something like that. I don't know. Remember these apocalypse lines? So it's the number one question that you ask when you get down to one of those lines. What question do you ask when we get down to a green line? Come on, somebody knows the answer. You should all know the answer. When something gets this oversold, what are you going to ask yourself about the company? Are they what? Will they be in business? That's right. Are they staying in business? Because when these companies get this beat to hell, that's the only thing you can ask, right? Are they staying in business? If they're staying in business, now I have to start thinking about, okay, is this the price to buy or do I go down here? So I can move this line pretty easy, right? Pretty easy to move that down there. But I like that level right there. And there's arguments for other levels too. I think that if it went below this, it probably wasn't going to stay in business. Probably means they're losing all sorts of business, right? So I think at this point you say, are they staying in business? Okay, it can't get much worse. Remember, asset-light company. So it's not like they're borrowing a ton of money to stay in business. Save image. Okay. PTC. There you go. So if you're at fundamental trends, the link for TradingView is right next to the chat. If you're at margin of safety investing, the link is in the one of the getting starting articles, one of the research piece or research websites. I'll put it in the charts too, the chart book. So end phase. Don't you wish you had bought in here? Man, I talked about it and I didn't load up. So end phase and Solar Edge. Those are the two duopoly players in the solar inverters, and they're among the handful of leaders in energy management as well. I think this stock's going to go a lot higher. Oops. Let's be consistent here. There you go. Could it get down to here? It sure could. So low 20s. 1, 2, 3, 4. Where is our overlap breaks out? I may be a little bit more generous with these guys because they have such a huge. Look at that! Look at that! Look at that! Look at that! See that? Hits it, comes down, blasts through. Battle zone. Hits it. Bam. I think that's a pretty good one. So it's a pretty wide range there, though, huh? You prefer to stay a little safer? I prefer to stay a little safer right now. Man, that's right in here. Old, different company back then, but it's clearly a battle zone. Daily volatility's high. Yeah, 30-ish. I think you can for sure sell puts on end phase at 30-ish, right? I think in the low 20s you need to. be a buyer. Yeah, look at that. Look at that. These lines are all pretty accurate. And where's end of the world stuff for these guys? I don't know. There. See, this is where knowing the deal with the company can influence you. If I don't think they're going bankrupt here, I mean, right? If what could happen is technology could jump them. And then it could just be, maybe they lose all their sales. Well, at this point, you ask yourself the question, are they staying in business? Are they losing all their sales and they're going to go under? Now you know, right? If they're not losing all their sales and they're going to be viable, and this is just some correlated market event or industry event, you buy them around 10. You could definitely argue here. I mean, I think that's pretty legit too. I want to ask the question, if we ever fill this gap, see that gap right there? See that gap? If that gap ever gets filled, you got to ask the question, is there a big problem, or is this just fixing a long overdue chart? But there's another gap here too. I just don't think this business is going to change all that much for the negative. And you all know that my thesis is that Biden's going to win. I think you should keep that in mind. Oh, okay. All right. Cash for clunkers. So what are we going to look at next? Tesla. See where that line comes from? Probably see that pretty easy. Resistance is futile. Hits it for a hot second and then bounces back up. So I was selling right in here. Nah, didn't think. I mean, I knew it was going to go up and then come down. I didn't think it was going to be way up there. Seemed like it was going to come back down in here to me. So I might mix up my greens a little bit. It happens in real life too. So where is our yellow line here? Man, is this a crazy stock or what? Look at that jump up here. Let's switch this to a daily chart. 1, 2, 3. 1, 2, 3, 4, 5. About here. Look at that big candle, the kiss. Right? Top of this one, bottom of that one. And I'll tell you, I learned charting piecemeal over a very long time. And because I didn't go into it with a mantra, I didn't go into it looking for a magic formula. I just wanted to help getting closer. What I'm doing right now is the conclusion I came up with, which is that every technical system out there has some validity, and not a single one of them is perfect. And they all make mistakes, and we put our mistakes on top of that. So I simplify this as much as I can. I'm just looking for battle zones, breakouts, breakdowns, big candles kissing, right? So if you really wanted to own Tesla, buy a little under 600 if you really wanted to. But there's a pretty strong argument that we could put this line right here too, right? In fact, overlap, 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 overlap. That's where I am going to put it because I'm a scaredy cat. But that line right there, a little under 600. If you are a true believer, I think you can buy it in there. This corresponds to the range where I told people to sell it the first time after we bought it under 200, right? So we bought it, I don't even remember. It's a while ago. It was longer than that. It's down in here. I think it was this trough in here. That's where we bought it. And then, in my infinite wisdom, I told you to sell it in here. C'est la vie. And now, I'd like to introduce you to a little company called Ford. Fourth Industrial Revolution stock that I think is going to do pretty well in the future. They make cars. Oops. Where'd my... You stole my Ford. That doesn't look right at all. All right. So let's take a look at this weekly chart. Long, long time ago, in a financial crisis far, far away. Ford. Wow, wasn't that a rough decade? Then the fast rebound, and then it's just kind of like, he has the gap, rebound. Oh, because it's got a rebound. Poop. So, where are our big levels? This looks like something, doesn't it? Did it get all the way down there again? Oh, look at that. That's where the support was. All right. So here's your red line. All right. Looks like it could be a little lower. About there. Looks about right to me. And here is your we need money line. Right? What if they say we could use some money? Normally these won't go so long. Then let's figure out what's that. That boink, boink, boink. That looks pretty yellow to me. About $6. I think conceivably you can buy Ford right now. You don't have to believe me that it's a great company. If you end up using one of their ventilators, right? Battle zone right here. Just a little under 5, between 4 and 5. I don't know. I'm not going to buy it today because I think the market's going to keep going down. It gets towards 4. I'm going to buy quite a bit of it. So the argument for Ford is A, great technology, way ahead on the fourth industrial revolution with learning machines, and they have built-in client base, right? So many people that are buying Teslas right now, way more are buying Fords. So when Ford says it's time to go EV and Cash for Clunkers comes out, right, and the government's helped them with their balance sheet already, I think Ford has a pretty bright future. Not only to get back up to this range, but like my AT&T argument, I think over the next decade they break out of it because they become more asset light, right? Less capital intensive. Massive new wave of cars. Everybody's going to buy an EV in the next 10, 15 years. A lot of those will get bought sooner than you think, by the middle 2020s. There's going to be all kinds of more incentives to buy EVs. You know, if you're looking to buy a car, I understand that the Christmas deals are going to be off the charts good. So if you really want an ICE car, probably, you know, later this year is going to be a great time to do it. Although I've seen great financing deals already, but I'm telling you, they're going to clear those cars from inventory at below cost. The company is going to eat money to get the dealerships to move the inventory. So the company will say to the dealership, look, you sell that whatever it is, we'll throw you an extra $1,000 for selling it. So now the dealership's price of the car just came down to $1,000. So take a look at what went on in 2009, 2008, 9, 10. You get those same amazing deals. So if you want a gasoline powered car, Christmas time-ish, you know, maybe even Labor Day, there are going to be some amazing deals. Keep an eye on those inventories. Yeah, Ford's dividend will come back eventually. But I'm glad that they got rid of it. I think that was a great move, right? You know, we talked about it in that dividend article that's on Seeking Alpha right now. I think it was smart for them to cut the dividend. That allows them to pivot. Ford, if you've listened to the conference calls, whatever his name is, Clay Jr., 3rd, 12th, Esquire, whoever he is, it said it's hard to straddle a line between old company, new company. They're using this as an opportunity to go new company. That's why they cut the dividend, right? They got money from the government, supporting their bonds. And, you know, I think that the incentives to come out next year are going to be pretty big. So I think you can wait, right? You know, somebody's asking about selling Enphase 2750 puts. I wouldn't do it just yet. A couple more dollars. I mean, change that $1.40 to $2.50 maybe, and then just set it and forget it. But that means that you're going to have a net cost of 25 if it gets put to you, and we think it might get a little lower than that. So you could even say, okay, well, I'd be really happy to own Enphase at 22. Maybe what I should do is sell the 2750 or even 30, and just the difference in price from 22 to your strike price is what your premium should be. So at 2750, I'd probably ask 550. You know, if you want to make sure it gets hit and you don't want to be too greedy, maybe put 450. But I think that you can ask for more money and set it and forget it. Let these things come to you. When this gets down to about 30, your premiums are higher, and you can decide, you know, how badly do I want the stock? You may want to sell the $30 put to make sure you get the stock. If you already have the stock and you don't want more, you just want to gobble up that premium, and the default is that you get the stock and you'd be okay with that temporarily, then maybe, you set a different strike price. So let these setups come to you. Okay, don't tell the market what to do. Let the market tell you what it's decided to do. All right. I've only got one other thing, is oil. I think that there's a setup coming from oil. You need to keep an eye on my list got all screwed up. I don't use them. That's not it. Oh, good grief. I put up that contango chart and I merged my browsers and I got overlapping stuff. But you want to take a look at the contango curve. So right now, the spot price of oil is below zero, right? It's negative. That won't last very long. But the May futures are up at 20-ish. So there's a $20 gap between spot and what they have to roll to next month. So USO is probably going to go to zero. Right? They're going to have to do a massive reverse split on USO, right? So because the futures they hold are front month and are worth nothing. So when they roll it, they get zero. And they're going to pay 20 something for the next month's futures. USO is going to zero or almost zero. And they're going to do like 1,000 to 1 reverse split. I'm not kidding about that. So if it goes to 50 cents and they reverse split it, and I don't even know what their rules are. I mean, maybe they have to kill it and start over. I don't know. There might be a play on a DBO, USO, oil, OIL type ETF when the contango curve disappears almost, right? Right before it switches in the backwardation, which I have no idea when that's going to be. I think the only thing that changes the curve anytime in the next year or two is a war. That's the only thing that makes oil more expensive is a war. Every container on the planet, every ship on the planet, every pipe on the planet is full of oil right now. There's no capacity anywhere. That's why I said, if you got a pole barn and you got a whole bunch of, barrels, get into the illegal oil trade. But excuse me, running out of steam here. I think the best play in oil is look for broken bonds. Look for bonds that are trading at 20, 30, 40, 50 cents on the dollar. And their first liens. The only other thing you can do is open a futures account, and I'm not going to coach you on that. If you want to trade futures, then you need to go to Forex Analytics, right? Go to these guys. If you want to trade futures, go here, and I don't have a code for this, but I would like you to tell them that I sent you. If you want to learn futures, go to these guys, and it's a nice setup, right? I mean, it's a good setup. The Elliott waves are just for commodities. You guys are all commodities and currencies. If you want to get into this world, start watching their videos in the morning from 7 a.m. Central to 8:30 Central to market open, basically. Watch their videos for a week or two and see if that's a world you want to get into. Because if you want to make money trading oil on the way up, you just gotta hold your nose and buy the futures. The problem is that's on margin, and you can lose a lot of money. The positive right now is because oil is zero, there's not much money to lose, right? It can't stay negative very long. So if you were ever going to buy oil futures, this is a spot to do it. But understand, if you're using 2-to-1 or 3-to-1 leverage, and this goes against you by 50%, you know, your $10,000 loss turns into a $50,000 loss. They'll tell you to write them a check. So go to Forex Analytics if you want to learn about futures trading. It's lucrative, and this might be a very rare opportunity to buy oil futures. I think that it is. I'm going to buy the broken bonds. I don't have clients that want to do futures, maybe 2 or 3. But this is not, even though I've gotten currency trades right over and over again, I just don't want to be a trader to this extent. I don't want to day trade this. But you could, certainly could. All right. I'm looking for Y charts alternatives. They raised the price on me to $3,000 a year, and these guys lowered it to $3,000 a year. So between these two, Centio and Y charts, they want me to pay them $3,000 a year, which, given that a lot of it's just automated screening, I can do Stock Rover for free, or almost free. Trading, I mean, between Stock Rover and Trading View, I get everything that these guys are offering. I just have to go to 2 different places, which I kind of like. Keep my fundamentals and my technicals separate. These guys merge them. Good companies, but do you really want to pay $3,000 to $6,000 a year for this stuff? I mean, come on. I mean, they're just raping the professional industry. So, any last questions before we go? Yeah, you know. All right. Guess I already had it. Okay, so we want to look at TAN. Yeah. Where is it at right now? 27. A lot of overlap right here. I think these look about right. Just sniffed it. You want to raise it to about there, maybe? Yeah, low 20s. I think we might get low 20s on TAN. Yeah. I mean, this actually looks like the right level. Low 20, 22-ish. If TAN gets into the low 20s, I'll buy it, but I'll probably also sell cash secured puts down to like 18 or 19 to get a second batch if it gets that low. So I'd probably buy here as well as sell cash secured puts that got me an average price down here. So buy around 22, sell the cash secured puts to like 18 or 19, and make sure you get a couple dollars for them. That's what I would do. And we're close, right? We're close. You just keep going here. And how does this market feel to you? Doesn't it feel like it's going to give up? All the bad news that's coming in? That nobody wanted to see the ads that I'm getting? The jewelry. I'm looking for a fiance in waiting ring. That's what I call it. We're not getting engaged. It's a fiance in waiting ring. Otherwise known as a promise ring, I guess. But I'm getting an engagement ring. So this one. What do you think of that one? Think she like that? I don't know. She wants something fancy. And they do a payment plan. I like that. I like payment plans. See, everybody have a payment plan. All right. I think we're done for the day. Go have some lunch. I'm going to put this up on a private link. So these will just be available in the chat rooms. But yeah, I think that this is the way to do it. Probably want to listen at 1.25. I'll put that on the URL. Yeah, right in here. We're getting close. We're getting close. I'll have links to all of them. So that's why I saved all these, so I can put the links up. All right. All right. Yeah, have a good one.